Welcome to Channel's Business Global with me, Juliana Olayinka, from our studios here in London. Coming up on today's show, Dr. Adesola Kazeem Adedunton, the Chief Executive Officer at First Bank Nigeria, will soon be joining me to discuss the group's extraordinary first half results and the importance of adopting artificial intelligence to improve their customers' overall user experience. And following British gas profits surging to a record high of almost £1 billion in the 6 months to the end of June, one particular campaign group is demanding an end to the privatisation of some of this country's biggest firms. I'll be finding out why from Pascal Robinson of We Own It. Then later, I'll be looking back at some of the biggest business news stories of the week. But first, on Monday, Nigeria's President Bola Ahmed Tinubu announced sweeping measures to soften the impact of his move to end fuel subsidies that has sent gasoline prices surging. Highlights of the 500 billion naira cost of living package include funds to support the cultivation of land for the advancement of agriculture and 100 billion naira to purchase buses that can be fueled by natural gas. The British Foreign Secretary has announced a new package of support for Nigeria during his visit to the country on Tuesday. James Cleverly said £10 million of funding will support sustainable and climate-friendly infrastructure development projects, while £55 million has been allocated to support the transformation of Nigeria's rural economy. Back here in Britain, fresh data has revealed that some 3,299 people made the illegal journey across the English Channel in July, the highest figure on record. The announcement comes as the Home Office has been forced to delay plans to send the first 50 migrants to a barge off the southwest coast of England due to safety fears. Well, for more on this, I was earlier joined here in the studio by our business correspondent, Simon Pusey. Simon, we've had new data this week from the Home Office, I believe, showing that last month, which was a pretty hot month in July for Britain, we had record numbers of migrants crossing over the English Channel illegally, of course. This goes completely against the promises that Rishi Sunak, the Prime Minister, made at the beginning of the year to stop the boats. We're halfway through the year and they're not stopping. Yeah, and it's looking bad ahead of an election for his 5 key pledges. And he made these pledges thinking that they were pretty achievable. That's why he made them, so that he could say when the election came, look, I've done what the people want. But yeah, as you say, the average number of migrants crossing the Channel illegally in boats last month was the highest on record. That's since 2018. 3,299 people made the journey in July in 63 boats, and that just doesn't look good. He made this pledge because the core Conservative voters that he's appealing to, one of the things they want stopping is illegal migration, and he wants to show that he and the Conservatives are on top of this, and whereas Labour are soft on migration and illegal migration. So that's one side of it. And then you've got the other side, which is what they're going to do with the migrants, with the illegal migrants when they arrive here, which they always will, you know, and certainly at the moment figures are going up, because another side of things for Conservative voters is they don't want money necessarily going to these migrants to stay in hotels, because that looks very unfair. These are illegal migrants. They shouldn't be being put up in hotels when everyone else is out there working hard in a cost of living crisis. And there are problems there as well. So this barge that there's been a lot of controversy over, called the Bibi Stockholm, it was supposed to be ported and take place today, start taking on illegal migrants today, but that has been delayed because of fears over fire safety. So on 2 different tracks for one of his 5 key messages, his 5 key promises to the electorate, it's not going too great. This barge is going to house eventually 500 male asylum seekers, and at the moment that's been delayed indefinitely. So 2 things that are not going well for him in a key pledge, and yeah, again, ahead of an election, it's not going too well for the Conservatives. Absolutely. You said 2. I think we need to add a couple of zeros on that. Thank you, Simon. Thank you. The First Bank of Nigeria has reported a surge in half-year profits of more than 200% compared to the same period in 2022. With more than 46 million customer accounts spread across Nigeria, the UK and sub-Saharan Africa, the group remains committed to its strategy of value-driven innovation and customer centricity. Dr. Adesola Kazeem Adedunton, the CEO of the First Bank Group, joined me earlier in the studio for more on these results. Dr. Adesola Kazeem Adedunton, Chief Executive Officer, First Bank Group. Thank you so much for joining me in the Channel's Business Global studios here in London. I do like to start off the show with a positive story, and that's what we're going to be talking about, because you've just delivered some pretty extraordinary first half numbers. In fact, I believe this is the best first half result you've had in your 130-year history. Let's crunch the numbers and talk to me about how the group was able to achieve that.
Okay, thank you for having me in your studio this morning. Yes, you're absolutely correct that the result that we released is actually the best result in the checkered history of our iconic institution. FBN Holdings PLC, which is the listed entity, released a PBT of 206 billion as at 30th of June 2023. When you compare this to where we're coming from, where we were about a year ago, this is an extraordinary performance over what we did same time last year. And it's actually anchored on the transformation that we started in 2016 when I was appointed as the Chief Executive Officer of First Bank Group, which is the commercial banking arm of FBN Holdings, which accounts for anything north of 90% of FBN Holdings. We've been very deliberate, we've been very strategic, we've been very clear with our mandate that we need to take the institution to the next level. In doing that, we've focused, one, on leveraging technology to deliver top-notch services to our customers. We've also focused on growing the customer base. And when you grow your customer base, invariably then the volume of transaction will go up. We've also been very deliberate in pivoting the institution away from what used to be a credit-led institution to now a transaction or transactions-led institution. What does that really mean? We focus significant resources, we expended significant resources, leveraging technology in building both our wholesale and retail digital businesses. And today we can say with a lot of pride that we have over 22 million active customers transacting on our digital platforms. On the wholesale side, we do control a sizable share of the market. Indeed, when the last time I reviewed the industry average, over 12% of the electronic payments within Nigeria goes through First Bank. Wow. So which is quite significant. We've also used technology to move traffic away from our branches. So the way we say this is that we've successfully transformed from being a purely brick and mortar bank to become what we call a brick and click.
Brick and click.
Brick and click. So which means you can either go to a branch, or you can just click on your phone or your internet and you're there. Today, about 95% of our customer-initiated transactions are carried out on alternative channels, which means outside of our branches, which is quite significant. The global benchmark is about 75. So when you do more than 75, you're actually regarded as a digital bank. We today, we do over 95% of our customer-initiated transactions are conducted on channel. So that basically speaks to how the institution over the last 7 to 8 years has pivoted from being a brick and mortar, like I said, to a brick and click institution, leveraging technology to deliver superior service. And when you look at our balance sheet, the balance sheets also reflect the increase in the volume of transactions going through the bank. Today we have, our balance sheet is in excess of 13 trillion. When you see the way we play in the digital area, like I said, and you see, you discover that this is a 130 years old institution, we've been quite successful in that transformation effort.
I want to talk to you more about innovation, because I know that resilience is really part of your mandate. You are Nigeria's oldest bank, but you like to be a pioneer. You like to remain innovative. How important is that to your bottom line and to ensure that you retain your market position?
Very interesting question. Innovation is actually at the heart of our business strategy. In fact, our core values as an organization has innovation as one of the 4 key pillars. Our view really is that the only way that an incumbent institution like ours could remain relevant and dominant is that you have to continuously be part of disruption. Yeah. You must be ready to lead disruption. You must be ready to be a part of disruption. And we've been very focused on innovation, leveraging technology. And I'll step back and I give you some very important data points that speaks to this. 2016, we had barely 60,000 users on our first mobile app. Today, we have over 6 million. 2016, we had barely, put it at the same level, about 50, 60,000 users on our USSD. Today, we have over 13 million users of our USSD. That same 2016, when I started as CEO, our online banking application had about 50,000 users. Today, we have about 1.1 million users. So you will see how we've leveraged technology, because the only reason why people will use your mobile app or your online app, it has to be available to them 24/7. It must be deemed to be safe, so they know they won't lose their money. And we've been quite successful. Like I mentioned in the earlier response to your question, we have over 22 million users today using our digital channels for the purpose of transacting with us. Beneath that, it's innovation, leveraging technology. We've also been quite aggressive in leveraging modern technology, robotic processing automation, for example, artificial intelligence, using that to drive not just innovation at the front end meaning what the customer see. We've also used this technology to actually improve our efficiency, the efficiency of processing internally. So I can say categorically that the key reason why this organization has continued to be a relevant financial institution, not just in Nigeria, but across the sub-Saharan African region over the last 129 to 130 years, is innovation is ingrained in the DNA of our organization.
And I've got to tell you, there is a lot of buzz around Nigeria at the moment, which is refreshing for us in the diaspora. We're not just talking about insecurity, we're talking about opportunity. And there does appear to be more opportunity coming from the new regime. I want you to talk a little bit about that, if you can, about the banking environment on the ground, but also the subsidiaries and what your hopes are in the coming years.
For us, we are very excited about the overall promise that the continent holds. We're also very, very excited about the new regime in Nigeria and the opportunity we believe it will throw up in the area of, building infrastructures, both social and physical infrastructure. And then basically the president has also been clear. There is a growth objective.
Yeah.
So when you have a leader that is very specific that I'm planning to grow the GDP by X, what he's telling the followers and the business community is that come along with me and we will achieve this together. And that's where an institution like First Bank becomes extremely important. Part of the reason why this institution has remained very relevant and dominant over the last 130 years is that we are part of the national infrastructure in Nigeria. We're heavily invested in Nigeria. We're, like I said, an African bank with a Nigerian nucleus, which means our taproot, it's Nigeria. So we are very excited. We see the opportunity because when we work with the president to bake a bigger cake, because that's actually the simple way to put when you grow the GDP.
Yes.
You're saying bake a bigger cake. Invariably what you're doing is that you're creating new opportunities, not just for yourself. You're creating opportunities to address unemployment. And when people are employed, you're also addressing poverty. addressing insecurity. So we're very excited about what the future holds for Nigeria, or equally very important, our role on the continent of Africa.
Dr. Adeshola Kazeem Adedunton, Chief Executive Officer of the First Bank Group, thank you very much for your time today.
Thank you for having me, Naren.
Coming up on Channel's Business Global, following British gas profits surging to a record high of almost £1 billion in the 6 months to the end of June, one particular campaign group is demanding an end to the privatisation of some of this country's biggest firms. I'll be finding out why from Pascal Robinson of We Own It. And I'll be looking back at some of the biggest business news stories of the week. All of this after the break. Do stay with us. Welcome back to Channel's Business Global with me, Juliana Olayinka, from our studios here in London. In a moment, I'll be catching up with the campaigner at We Own It, Pascal Robinson, in Manchester. But until then, here's a breakdown of the biggest business news stories of the week. Prime Minister Rishi Sunak has committed to pressing ahead with oil and gas exploration and production in the North Sea, despite significant opposition from campaigners in the region. During a trip to Scotland on Monday, the Conservative leader confirmed that the government will issue 100 licences to companies from September. Sunak said he remains committed to hitting net zero emission targets, but is adamant that Britain's transition to net zero will involve the use of fossil fuels. BT has appointed Alison Kirkby as its new boss. She'll be taking over from the group's outgoing chief executive, Philip Jansen, by the end of January 2024. Kirkby, who becomes BT's first female boss, has been president of the Nordic telecoms provider Telia for the past 3 years. She'll be paid a base salary of £1.1 million and an annual performance-related bonus of up to £2.2 million. BT is Britain's biggest telecoms group and is the parent firm of the EE mobile network. The Nigeria High Commissioner to the United Kingdom opened the training of federal High Court judges in London this week. During his keynote address, Ambassador Sharafa Tunji Ishola spoke of the need for the Federal High Court to embrace technology in justice delivery. There has been angry reaction to British Gas reporting record half-year profits as millions of households continue to struggle to pay their energy bills. British Gas's profits rose to £969 million after price cap rises allowed it to make more money from household bills. Regulator Ofgem said the bumper results were a one-off due to the changes, but campaigners say the profits were a further sign of Britain's broken energy system. Well, for more on this, I'm now being joined by Pascal Robinson of We Own It. Pascal joins me from Manchester. Pascal Robinson, it's an absolute pleasure having you on Channel's Business Global today. We're bang in the middle of earnings season. No surprises that all the big oil, gas and energy giants have once again reported pretty extraordinary figures, not just for the second quarter, but for the first half of the year. What are your thoughts on some of these figures and how it's impacting pretty beleaguered British households at the moment?
Firstly, thanks so much for having me to discuss this. It's really vital that we're discussing this. I think it's pretty clear to everyone watching this, it's an absolute scandal. We used to own British Gas and it was sold off back in 1986 and now it makes profit for a few. So those profits are nearly, I believe I read today, nearly tenfold what they were previously. It is an absolute scandal. And yet the CEO is trying to argue that this is a lag from when they've paid so much over the pandemic and over the invasion of Ukraine. However, as you say, we're in the middle of earnings season. We've seen bumper profits for so many energy companies, all of the energy companies, arguably. It's time that we saw British Gas, come back into public hands. And it's time we saw all of our energy system come back into public hands.
But most importantly, though, Pascal, is this affordable? There have been so many issues with some firms. Of course, we know that British Gas, Centrica, as you've mentioned, the parent company of that, they had to bail out so many energy firms that collapsed after the war in Ukraine. And then we've had the issue with Thames Water too, and the fact that the taxpayer may have to bail them out. Are the public interested in taking ownership of these firms, considering they've got more important things to think about, like how much it's costing to put a decent meal on the table at night?
It's a really, really good question. But the reality is that bringing the energy suppliers as a starting point back into public ownership would cost around 2.85 billion. And when we consider that we have subsidized the energy companies 30 billion through the energy price cap, it's a small price to pay. And that would mean we'd have more control over our energy system, and we could start to implement cheaper bills. All across the rest of the world, there are publicly owned retail companies, for example, in Germany, Italy, the US, and prices tend to be 20 to 30% lower. And we all know that EDF in France, their bills went up by 4% in 2022, whereas ours went up a staggering amount. Yes, it would cost an amount, but arguably the money that we're throwing at energy companies, it's a bargain. And also it would save us a huge amount of money.
Some fascinating insights there, Pascal Robinson, campaigner at We Own It. Thank you so much for your time today.
Thank you very much.
And to our final story, a new report titled Innovations in Digitising Health Supply Chains in Africa has revealed that Nigeria has become a crucial market for track and trace innovators. Yomi Kazim is an engagement manager at healthcare consulting firm Salient Advisory, who authored the report, and he joins me now from Vancouver for more insights. Yomi Kazim, it's a pleasure having you on Channels Business Global today. So talk to me about some of the main findings from your report.
It's a pleasure being here. So our main findings touch on the core focus of our research, which was to examine the landscape of health companies on the continent that are using technology to improve health supply chain processes in Africa. And in this regard, we identified nearly 350 innovators that are playing a key role in digitizing health supply chains across the continent. And these innovators are headquartered across 27 African countries, which shows that, there's a nice spread across the continent. We also see some companies, of course, based outside of the continent. Now, with the landscape clear in terms of the number of companies that exist and where they operate, we then try to examine the level of traction that they've gained. And one of the most important findings from our work this year is seeing that African governments and agencies are starting to work with and partner with these companies to leverage their technology solutions to improve public health supply chains. As most people know, public health supply chains are typically overburdened, and they're also often inefficient, right? And our report shows that with nearly 50 partnerships across 12 African countries, governments are thinking outside the box by taking up and implementing these private sector solutions from health tech companies. And interestingly, Nigeria is right at the front of the momentum because we see more partnerships in Nigeria than in any other country. And most of these are at subnational and state government levels, where startups are essentially helping governments to minimize waste of critical health products, which ensures that everyday Nigerians have much better access to quality medication, which obviously means that more lives are ultimately saved.
Lastly, and very briefly, if you can, for me, Yomi, I believe, correct me if I'm wrong, that this is your first report looking at Pan-African digitalization of the healthcare, but you have been collecting market intelligence for several years now. Do you have some forecasts for us about where we can see the Pan-African market, not just in healthcare, but beyond over the next 12 months?
Yeah, it's always hard to predict the future, but I can do my best. First, a bit of background. Over our research has evolved over the years, as you say, and so has the marketplace. Years ago, for example, we didn't see this level of engagement between innovators and governments. But this year, more than ever before, we're seeing this at an accelerated scale, and that's something everybody should be excited about. In terms of forecast, now, we've seen a decline in the number of new companies that are entering the space. This is possibly due to a saturation of companies after the post-COVID wave, where a lot of new companies were founded. So it'll be interesting to see how that evolves over the next 2 to 3 years. But one thing that's clear as far as the future is concerned is it's likely we see a lot more engagements between governments and innovators. When we spoke with government officials across the continent, one thing that was very clear to us is that there's a high level of interest from government officials in working with tech-enabled health startups. And the goal is, or the idea rather, is that these startups can help them deliver better healthcare to the public. And that's something, like I said, we should all be excited about. Now, in theory, this means safer health supply chains with better access to medicines for everyone. In reality, this means that you and I and people that we know will end up receiving better healthcare, and that's always a good thing.
That is always a good thing. And I do like ending the show on a good note. Yomi Kazim, Engagement Manager at Salient Advisory. Thank you so much for joining me from Vancouver today with those really fascinating insights. Thank you.
Thanks for having me.
Thank you. Well, sadly, that's all we have time for today, but as always, do get in touch with your comments and suggestions. I'll see you at the same time next week for more in-depth business analysis on Channel's Business Global. Goodbye.